Hi, I am Nayo Carter-Gray, the founder of First Step Accounting, and crunching numbers is my type of cardio. I'm partnering with QuickBooks on this video series to help answer questions by small business owners just like you. So in today's video, we're going to cover deferred tax assets and liabilities. And hopefully by the end of the video, we will unpack all of the things and you will have a better understanding of what they actually are. In another video, I talked about why balance sheets are so important and every small business owner needs this in their financial statement package. However, you may have noticed your accountant or tax professional added a deferred tax asset or deferred tax liability to your balance sheet. So, what do they mean and why are they important? But before we continue, make sure you hit that like button and subscribe to the QuickBooks channel, especially if you find this video helpful. Oh, and if you're a reader like me, you can check down in the description for a link to an article below. What are deferred tax assets and liabilities? Well, they're financial items that appear on a company's balance sheet when the income on a tax return is different than the income on your accounting records. So, how does this happen? Well, some transactions can have special or alternative tax treatment that causes these deferred tax assets and liabilities. Some items can include pensions, warranties, leases, depreciable assets, and the biggie, net operating losses. Okay, what does this mean for your business? So, a deferred tax liability are tax debts you're going to owe in the future. So to try to break this down and simplify it a little bit, think about the taxes you'll pay next year. In reality, we know that those taxes are actually related to the year we're currently in. So we would book a deferred tax liability to record the expense in the correct accounting period versus having to wait until next year to see those expenses in our books. Depreciation is another common expense that can have different tax versus accounting treatment and cause a deferred tax liability. A deferred tax asset is the complete opposite of a deferred tax liability, as it typically results in a refund or a tax credit being received. These generally arise when a business overpays or advance pays taxes, or if they have a carryover loss from previous years. Side note, a carryover loss is when a business has a loss that it can't take in full in one tax year, and that loss carries forward to future periods. An example of a deferred tax asset would be the advance payment of rent. You got the cash out the door, you got a couple of months prepaid in advance, and that expense does show up on your profit and loss statement. However, it gets treated a little differently for tax purposes. You don't actually get to take that deduction until the period in which it occurs. So therefore, it generates a deferred tax asset. When considering deferred tax assets and liabilities, understanding the difference between financial reporting and tax reporting is vital. The revenue and expenses reported on your financial statements may not always translate to the income and deductions on your tax return. Tax rules and financial rules are slightly different, so you may see a difference in taxable income versus the net income on your financial statements. It can be tricky to determine if and when you'll take advantage of your deferred tax asset. One thing to consider is tax rates. In years when tax rates are high, the savings from your deferred tax asset will be greater versus years when the tax rates are low. As a small business owner, understanding how deferred tax assets and liabilities work can get pretty confusing. So if you want more help understanding specifically how these things work, please talk to your trusted accountant or tax professional. That, in conjunction with reliable accounting software, will allow you to follow the proper accounting standards as well as maximize your tax benefits. Whoa, there was a lot to cover all at once. But if you like this information and found it helpful, be sure to like this video, as well as subscribe to the QuickBooks channel so you can find more video content just like this.